Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello there, everyone. This is Harold Green of Brightree Wealth Management, and it is time to stop doing what you hate. Hope you are having a fantastic day today, as always. I'm pretty excited to be sharing today's show with you. But before I get into it, I want to talk to you a little bit about my week or whatnot, how things have been going. And I don't know, for some reason, I've been a little bit up, I've been a little bit down, I've been a little bit tired, been a little bit excited about a lot of different things. And one of the things I'm learning is that, I can't control everything. I can't save the world. I can only do what I'm supposed to do. But yet there's a lot of things out there that bother me. And my goal is to help people get out of the 97% and then get them into the 3%. And those who have stuck with me, they are reaping the benefits of sticking with me and putting their faith in our process and the things that we do. While on the other hand, I see people out there struggling, trying to, go at it on their own, trying to fight the battle by themselves. And, but they've convinced themselves that they know what they're doing is working, they're satisfied with it. But when you pull the covers back on everything, there's some things that are missing in their strategy. And today I want to talk to you about what I call the new stock market. This is something that I've been talking to my clients about for a very long time. And because investments do carry risk of loss, past performance is no indicator of future results. And if you're going to invest in this new stock market, you're really going to have to do your due diligence, do your homework, understand your risk horizons, time horizons, understand all the different types of risk that are associated with investing in the stock market. But because I believe that we're in a new type of stock market, everything else is, the basic stuff that we look at, you're going to have to take that and just max it times 5 or 6 or 7 or 8 or 9, 10. When you start talking about risk and different things like that, you have to multiply these risks because they come out of nowhere. But because we're in this new stock market that I call it, there are tremendous opportunities to get your assets on fire, to accomplish your goals, to accomplish your dreams beyond your wildest imagination. The title of today's show is Investing in the New Stock Market. Are you ready? 1, 2, 3, let's get it. I don't even know where to start, but there's just a lot of things I kind of want to get off my chest, get out of my mind. I had a great dinner the other night with some clients and friends who come out to Las Vegas kind of frequently. I have clients coming out next week. I think I have clients coming out. I don't know. People come out here all the time because again, in Hawaii, people come to Vegas because it's a short flight and it's, they don't have to get off the plane and change planes. It's just, one stop, you just get here, boom, nonstop travel, right? And one of the things that came up was we were talking about kind of like what it means to be rich. And my friend said, Harold, I don't feel rich. I said, you know why? Because you don't live rich. You live like you've always lived. And it's not that they don't enjoy life. It's just that they don't go out and buy Ferraris and Lamborghinis and things like that, although they could afford to, but they just don't. That's just not who they are. And I had to remind them that, yes, you are rich. It's like, well, I don't feel rich. I said, yes, but you're rich because we've stuck to the program. We've stuck to the plan. And now you're living the dream that you've always wanted to live. You work hard, you put money away, you got the right people on your team, bam, here you are. But I've helped them invest in this new stock market for quite some time. And investing in the new stock market is going to take some guts. It's going to take thinking outside the box. It's going to take ignoring the noise. And sometimes it's going to take doubling down on things that people tell you shouldn't be doing. And I'm going to be very careful how I say this because I'm not sure who's listening to my show and what their intentions are. Okay. And I have to put that out there. And as an investment advisor, one of the things that's required for us is that every 2 to 3 years, we have an inspection done on our firm by the states that we are domiciled in. And if we're at a certain level of assets, we are under the jurisdiction of the SEC. And one of the things they look at is what is our strategy? How well are we sticking to our strategy? Is our strategy working for our clients? What are we charging our clients? Is it a fair price that we're charging our clients for the performance? I mean, they dig into a lot of different things, and we really have to be on our game. And from what my understanding is they look at hundreds and hundreds and hundreds of firms. And I've had to go through this twice now since I've had my firm, thankfully, and I'm sure I'm going to go through this many times more. But it appears to me that a lot of investment advisors aren't doing the same level of work that we are doing, and they're not taking advantage of investing in the new stock market. Why? Because it's risky. And the more risk you have in your portfolio, the more that investment advisor has to manage the account. They have to pay attention to what's going on a daily basis. Sometimes it's on an hourly basis. And the question I get is, Harold, isn't that too much work? Isn't that too much work for what you're getting paid? No, I'll tell you this. Some people think I make too much money. They think I charge too much. But when you look at this from an inspection standpoint and what the regulators are looking at, sometimes they think maybe I don't make enough and I'm doing too much. And I was sharing this with a friend of mine the other day, and I said, I want to be an advocate for my clients. I want to be an advocate for your wealth. I want you to succeed beyond your wildest imagination. So therefore, I work as twice as hard, sometimes 3 times as hard as everyone else, because I would want my financial advisor, my investment advisor, to be the same advocate for me. I don't want to call the guy and I can't get a hold of them because they're on vacation in Europe and they won't be back for 3 months. They're just chilling, maxing, relaxing, or just something crazy like that. So my team and I, we're always going above and beyond what it takes in order to make things work for you, but not only work for you, to excel for you. And I'm kind of like, I'll put it to you like this. I'm kind of like your dog. I'll fight for you. And then if I have to, I'll bite somebody for you. And sometimes I have to bite other financial advisors and keep them away from my clients because they're trying to pitch to my clients crazy stuff that they don't need. And it's insane. And so if you're sitting there asleep at the wheel, not watching and paying attention to what's going on, you can lose clients over stupid stuff. And I want to get to where I'm getting to in the new stock market. Now, I'm going to say this very carefully, and I'm going to be bold about what I'm going to say. And anybody that wants to challenge me on this, you can challenge me all you like, but you cannot deny what happens on a day in and day out basis. And I want to talk to you a little bit about how the new stock market is manipulated to the max. And how's the stock market manipulated to the max? The new stock market, anyway, is manipulated by number one, noise, headlines, stories, narratives. And if you're if you're an investor and you're out there, you're doing it on your own, here's one of the things I want to tell you. I'm going to let you in on a little secret. It goes a little bit like this. Everybody knows it, I think, but they don't really pay attention to it, right? You know how we talk about buy low, sell high, different things like that, right? And one of the things I've seen several stories come out about companies, and the timing has been very, very suspect, very suspect. I'm going to tell you how to take advantage of that. All right. Now, make sure you do your due diligence. I'm not your investment advisor. I'm just sharing with you educational information. All right. If you act on anything that I tell you in this show, you're going to do so, right? And, you're in charge of what you do. I'm just sharing with you information. Okay. Now, if you take advantage of it and it works, great. But if you do it at the wrong time and it burns you up, then that's like, all right, that's why you need to have somebody helping you with this. All right. Because there may be something that you're not seeing. But I'm going to let you in on a secret ingredient. One of the things you can look for is have these hedge funds, these large institutions, have they started shorting a particular stock? All right. This is the new stock market. They've been doing this for a long time, but now with the advent of algorithms, it just takes this to a whole new level. And I'm going to start with a company called NVIDIA, and you can apply this to any other company out there if you can find the information. Okay. So NVIDIA has been on a tear this year. I mean, a real tear. Why? Because it's the AI trade. And what you have in the new stock market is you have the old school guys coming out saying, get out of technology, get out of growth, get into, value, get into small caps, because the Fed's going to cut rates. Like, when are the Feds going to cut rates? How many times they're going to cut rates? What are the size of the rate cuts? How long is it going to take for the rate cuts to show up in the bottom line of these small cap companies, these mid cap companies? It could be a year and a half. And by then, the stuff that they told you to get out of, it's up 40, 50, 60, 70%, right? So I'm looking at this saying, okay, why are they telling me to get out of NVIDIA? What's the reason that I need to get out? And I started saying, okay, let me go take a look at the short interest. So if you go to NASDAQ.com/market-activity/stocks/NVIDIA/short-interest, you're going to see something interesting here. NVIDIA was short on 5/31/2024, 29 million shares. The average daily short volume is 49 million shares. You can look up what it means to sell a stock short. I'm not going to get into it. All right. The very next month, 2 weeks later, NVIDIA was short on 6/14/2024, $315 million, right? Why? If I go and I look at the tech chart and I see, or the performance chart, and see what was happening 6 months ago in, say, June or whenever they were selling it short, what did I say? June 14th. And I'm looking at here and I'm looking at June 18th or whatever it might be. We start in April, NVIDIA's down some. They get up to about $135 a share. That's 60%. So from April till June, you're up 60%. And then they start the shorts. All right. And then it just goes up. And the next thing you know, on July 10th, NVIDIA just crashes. And it goes down, then it goes back up. And then we're sitting here in October, right? NVIDIA is up 55.43% from April, right? But yet the shorts, okay, the shorts went up to like 315 million, then down to 300 million, then down to 280, then down to 275, then up to 293, down to 260, up to 275. Now they're down to 251. And one of the things to pay attention to is when these guys start to short the stock, they think it's going to crash. And if it doesn't crash, here's what I saw the other day. NVIDIA didn't crash, but then a story came out saying that some officials in our government are talking about putting caps on chips to foreign countries. Okay. No, because they don't want China to get the chips. And I looked at that and I said, wait a minute, why are they putting this out now? Why couldn't they put this story out, at the beginning of the year? They've already talked about curbing chips to China. They're already saying those things. And as soon as that came out, the stock, I think it went down like $9 or $10 or something like that. It was just like algorithm trading, boom, 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 boom. So here's what I think. And here's what I see. I constantly see these negative stories out there to try to drive a stock down. But here's what happens. If enough people look at this and they say, wow, these guys are setting themselves up for a short squeeze, then what that means is if the stock starts to skyrocket, they're going to have to buy these stocks back at a higher price because they sold them cheap and then they thought they going to buy them back at a lower, they sold them at a certain point. And then they want it to crash so that they can buy it back at a lower price and then make a buttload of money on the difference. But if they have to buy it back at a higher price, that could bankrupt them. And that's exactly what happened with the GameStop situation. So what do we do in our strategy called scoop and score? And that's just a term that I call it. It's buy low, sell high. Basically, we look for options on companies that have been beaten up, okay, for no good reason other than the hype. If we look at the fundamentals of a stock, we look at their cash flow, it's up. Earnings before taxes and depreciation, up. Long-term debt, up. Earnings per share, up. right? And so if you see this and they're shorting the stock, it means they want the stock to crash so they can make money on it. But if it's a good company, that's not going to happen unless they do something to cause it to happen. And that's what I see time and time and time again when we're investing in this new stock market. And if you don't have an option strategy in your portfolio and you want to see what that looks like, I want you to get in contact with me so we can run through these scenarios and see how adding an options overlay to your traditional stock portfolio can help you. It's risky, but I'm telling you, investing in the new stock market, you are probably not going to see the returns that you could see by having an options overlay strategy. One of the things I see from a lot of advisors is they won't get into the options trading strategy because number one, is too risky. Number two, it takes a lot of time to watch these things, and there's a lot of research that goes on into it. And then number three, they don't properly communicate with their clients and help their clients understand the level of risk that they're taking, okay, how it's a benefit, how it can be a negative, and what does it look like in their long-term portfolio. With our rapid retire financial planning process, we have the three buckets: a short-term bucket, intermediate bucket, and a long-term bucket for our clients who have retired. And each bucket can't be at the same level of risk going all the way through. But what society has done to people is they've said, you're retired. You're not supposed to be taking that kind of risk. Okay, says who? Well, what if it crashes and you run out of money? Well, a lot of these negative premises are built on what ifs, what ifs, what ifs, what if, what if, and it scares people. It's fear-based. And if you have the proper strategy, then you can answer those what if questions. What if the stock market crashed? Well, in my short-term bucket, there's $300,000. Okay. I only need $50,000 a year out of the short-term bucket to help supplement my income. I'm 56 years old. I'm probably going to live until I'm 80. And if I follow the traditional method of, hey, Jerry, you're retired, bro. Like, you don't need to be taking all that risk. And it's like, well, $300,000. If I got a lot more than that, yeah, I can afford to take that risk because I have a longer time horizon in my other buckets, my intermediate bucket, my long-term bucket. I have time. So if the market goes down, I can take advantage of these market downturns with an options overlay in my portfolio. But in my short-term bucket, I may want an options overlay, something simple with not that much risk, but then also I have income-based stuff in my portfolio, but then I have an options overlay on my income-based stuff. So that way I'm earning something, interest or whatnot on my income assets, but then also I have a little bit of octane in there with the options that if it does explode to the upside, that's going to make my short-term bucket look that much better. And it takes a lot of work. A lot of people are afraid of options. A lot of people have lost a lot of money in options. And the other thing that can happen with options is a lot of times we sell out of the options in the first year. Why? Because they've gone up 100% or 50% or 60%. And sometimes options can cause you a tax situation. And so therefore, you have to have that built into your financial plan. The other issue is that a lot of people don't have a financial plan that dictates the trading. Okay. They're just trading for a specific outcome. They hope that someday they have this much money, but they don't understand how to tie, like, that financial plan ought to be managing it, kind of like the autopilot or the pilot of the plane. We're going to a certain destination, but somebody has to be flying you there. And that's how I look at our situation in our firm. So you could be paying taxes. You could be paying a lot more taxes. Some people hate paying taxes, but we're conditioning our clients and saying, hey, look, if we made you an extra $100,000 this year and you got to pay another $40,000 in taxes overall, I mean, look, take the win and pocket the money and reinvest it somewhere else, right? Just take the win. Let's not argue about, okay, I got to pay more taxes. As long as we're sending you the money to cover the taxes out of your portfolios and we've got that built out into your plan, man, I take that win all day. And investing in the new stock market, there's going to be a lot of opportunities like that. Algorithms selling stocks, selling them down because of bad news. We have other stocks like Palantir that's going through similar situations, stocks like SMCI going through similar situations. Anytime you see the shorts just like going after these companies, That's where you want to put that on your radar and pay attention to it. Now, I don't look at companies that are not well known, that are being shorted, trying to make a quick buck. But that's something that you can do too. Things that, they're going to be left for dead, like a Hertz or something like that. Like these guys their company looks like it's going to be like left for dead, and then they're shorting the heck out of it. People do play those and then hope for a short squeeze, but they play it with the stocks. But, if you had $1,000 and you play that one, played it with an option, you could be up quite big, or you can lose the entire thing. So that's the risk with an option. You can lose your entire investment in that option. You put in 2,000 for whatever the risks are that are associated with that. If it's a geopolitical risk, something happens, a war pops off, interest rate risk where they raise interest rates and that, it to cool down inflation, that could cause that thing to drop. There's a lot of reasons why options have not performed for people. A lot of times they get in at the wrong time. A lot of times they pick the wrong strike price. A lot of times, it's just they're choosing the wrong company. But most people in America are not participating in this strategy. They're not participating because they've been told it's dangerous. Here's what I think is dangerous. I think investing money, not knowing what you're going to have at a specific date is dangerous. Not knowing if you're going to have enough money for retirement is dangerous. Not knowing whether or not you get to retirement and now your insurance goes up on your condo and you can't afford it, that's dangerous. Getting to retirement and then property taxes are so high you're going to be forced to sell your house, you can't live there, that's dangerous. What's dangerous is moving to Florida, not understanding these hurricanes and how crazy they are, and not putting the proper level of insurance on your house. That's dangerous. Having kids, not having enough money for college, that's dangerous. Getting sick and not knowing what the healthcare system is going to look like 10, 15, 20 years down the road, and making sure you have enough money to cover your needs that are not covered by healthcare, that's dangerous. And so if you're listening to me right now and you are not sure that you have the proper strategy in place that's going to cover all your goals and that you're properly investing in this new stock market, you got to get in touch with me, 808-521-4401, and get on my schedule. Now, back to the thing that people were saying about getting out of tech. You got to get out of tech. You got to get out of tech. I'm telling you, we are in a certain time and space where you have to invest to meet the moment. Someone said, Harold, what about gold? What about silver? What about crypto? What about if the dollar collapses? What if the dollar crashes? What are we going to do? And I said, well, you could buy gold. And I've shared with you folks this before. But you buy gold, you're going to have an armed guard, because in order for you to, be able to use your gold at the grocery store, look, if the criminals knew and people that were hurt knew that you're going there and buying groceries, and the only way that you were able to buy groceries is with gold, guess what? You're going to get stuck up. You're going to get robbed. Something is going to happen to you, and it's not going to be a pretty situation. So you don't ever want to be in a situation where the only way you can buy groceries or put gas in your cars with gold and coins and silver and things. You don't want that to happen. Okay. So what we do is we hedge against things like that with crypto type products. We don't buy crypto itself. We invest in crypto related assets that are liquid on the New York or on our stock exchange. Now, if you want to hold Bitcoin outright, that's fine with me. I have no problem with that. As a fiduciary, we just can't hold it for you in a wallet or anything like that. Okay. Because that's a lot of passcodes to kind of keep track of. To me, that's like way too much. But in order for our currency to be worth nothing, it means we don't have a country anymore. Our military is weak. We sold out to whoever else, the highest bidder who wanted America. And now we're under some other currency because we've given up our country. And that's a political risk. And I'm telling you right now, one political party does better at protecting the dollar than the other. And you're going to have to look at that. What's dangerous is not knowing who's going to do what when they get elected. And you're going to have to take matters into your own hands. And I tell my clients all the time, we don't care who's the president of the United States from a numerical standpoint, because there's always opportunities that each party creates, whether we like the opportunity or not. It could be a Facebook. It could be, I don't know, it could be something you may think Facebook is immoral. I don't want Meta because They have algorithms that affect children. And yes, all that could be true, right? All that could be true. But what if it's over exaggerated? What if it's a narrative that's being pushed? Okay. You're going to have to understand where you should be. Now, there's other companies out there to invest in other than Meta. But what if there's a scoop and score opportunity with that? Now, sometimes you're going to have to put your feelings aside. Now, I'm not saying go out there and buy stuff that's like hurting people. By all means, I'm not saying that. But you got to make sure that you're not avoiding something because of a particular narrative that's being pushed in this new stock market that's designed to make somebody money when someone loses money. So I just wanted to share this with you. I know I'm super hype about this morning, but I've been getting a lot of these questions about what's going on, what should we be doing, where should we be, should we be buying this company, should we be buying dividend stocks and things like that. And I'm like, yo, look, when I run these numbers, all this stuff, it's just narratives that people are pushing to get you out of these positions so they can crash them down and make money on them. Okay. And guess what? They're already over in the dividend paying stocks anyway. All right. They've already gotten out of their tech stocks. They've already gotten over there and they shorten their tech stocks. And as soon as you get out of the tech stocks and they crash, guess what they're going to do? They're going to sell their dividend paying stocks. They're going to sell their small cap stocks. They're going to get right back into the stuff that you just sold out of. Okay. It's back and forth and back and forth and back and forth. And you have to learn how to take advantage of that. And if your person or your team is not doing that, and it's not meeting your goals, you might want to have a conversation with someone who may be able to do that for you. Like I said, for a lot of my clients, I'm their dog. I'll fight for them. And if I have to, I'll bite for you. I mean, I'm not condoning dog bites. Don't get me wrong. But you want a staunch advocate that's in your corner. And that's all I'm trying to be for the people that are on my bus. So thank you for tuning in to this show. Looking forward to sharing much more with you folks in the future. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.